We'll probably start now with introductions. The format of this conversation will be Troy will give us this wonderful presentation, which is some of the knowledge, just a hair of the knowledge he has about grant management. And we'll kind of span to federal grants and others. And then if we're able to, we'll spin off in like some TA breakout conversations. And so we'll figure out the pace of that. And then wrap up at noon. And if you have any questions, Troy is here. If you have like follow-up questions, or CPIN is here as well. And so with that, I'll introduce myself. I'm Angela Silva with CPIN, and this meeting, this TA meeting, is part of the Tacoma Capacity Building Project. So thank you for being here. And I'll pass it on to Troy.
All right. Thanks, Angela. So my name is Troy Rector. Great to be here today, to be a resource for nonprofits in the city of Tacoma. I am a shareholder at Clark Nuber in our nonprofit services group. So we have a slide a little bit on Clark Nuber, but about 40% of what we do are serving nonprofits. So serve a lot of different types of nonprofits, including the single audit, as well as federal grant assistance. And so glad to be here today. And again, we're going to start off with kind of a general presentation, kind of an overview, and then, as Angela had mentioned, move into the technical assistance and answer the questions that you have.
Hello, I apologize. I had client call run over.
Oh, no problem. So would you like to introduce yourself?
Sure. Hello, everyone. My name is Jen Keller. I'm a principal in the Accounting and Consulting Services Department with Clark Nuber, and I specialize in grants management, specifically federal grants management, and I help organizations with everything from the pre-award through the closeout of grants, including indirect cost rate negotiations and just general compliance with policies and procedures. So I'm happy to be here today.
Yeah, great. All right. So in terms of the slide deck, what we've put together in terms of just kind of generally around nonprofits, we're going to talk about the financial statement. So when a nonprofit needs an audit, one of the key items they deliver are financial statements. We'll talk about what that is. We'll talk about how to prepare for financial statement audits. And then we'll talk about the single audit. So those nonprofits that receive and administer federal grants, we'll talk about, actually when is a single audit required? And if you do have to go through that process, how best to prepare. And of course, we can't forget about the tax side of things when we're talking about nonprofits. And we'll briefly touch on the tax aspect of things. The one disclaimer, if I know we had kind of the formal disclaimer slide, the informal disclaimer here is that neither Jen or I are in our nonprofit tax group, where we have specialists in federal tax, we have specialists in state local tax. Our role today will be to field those questions and then get back to you with the answers, because definitely, I mean, we could probably know a little bit, but definitely want to lean on the experts when it comes to those types of things. So the financial statements. So in terms of audited financial statements, why would a nonprofit potentially actually go through the process? Because it's time consuming. We're going to talk about the experience level that's needed. So it's a big undertaking. But typically, we'll see nonprofits needing an audit, maybe because you have a bank loan and the bank requires it. Bank requires audited financial statements with a certain period of time after year end. So that's definitely one way. If you are a nonprofit registered in the state of Washington and you're soliciting contributions in the state of Washington, the state also has audit requirements. And in the state of Washington, the requirement there is if in the last 3 years your average annual revenues exceeded $3 million, then you're required to submit audited financial statements. So that would mean that, okay, we're going to take what our total revenues have been over the last 3 years, divide by 3, and if that average is over $3 million, then when you renew your charitable registration with the state on that annual basis, you would then be required to submit your financial statements. The single audit, so this kind of gives away one of the slides, but if you expend more than $750,000 in your fiscal year, you're required to have this single audit. And we're going to talk about how that threshold is increasing to $1 million. But when you're required to have that single audit, a financial statement audit is also required as a part of that. And I know certainly during the pandemic, with a large amount of federal COVID assistance flowing through, organizations were receiving federal assistance for the first time. Some of them were even over that threshold for requiring a single audit, but they actually never had a financial statement audit before. And when we talked about that process, definitely a lot to go through a single audit, but if you haven't been through a financial statement audit before, there's certainly effort involved there. So it's almost like a double the effort for that requirement. And then in addition, beyond that, nonprofits will oftentimes be required to have a financial statement audit. Maybe in the bylaws of the board, they require one to be performed, or oftentimes donors, one of their criteria they may have for applying for a grant is that you have a financial statement audit or a review. So we'll typically see that with maybe newer organizations or organizations that are growing, where they kind of get to that point where, like, we've had a couple of applications we had to turn down. We have donors asking for a financial statement audit, so let's go through that process. And again, we're going to talk about what that involves. But first, looking at nonprofit financial statements. And so, these are the 5 kind of elements of the financial statements that are required for a nonprofit. That follows generally accepted accounting principles. That's the balance sheet, so your assets, liabilities, equity. The statement of activity showing your revenues, expenses, what portion is with donor restrictions, what portion is without donor restrictions. We have the statement of functional expenses, and that's really just being able to show by function. So programs, management in general, fundraising, what are your salaries and wages, supplies, what are your expenses, statement of cash flows, and then ultimately the footnotes. And in a financial statement audit, the auditors will typically actually prepare the financial statements. So then the question is, well, if the auditors are preparing the financial statements, what do I actually need to do as an entity in order to get ready for the audit? And so the key thing to mention here is being reconciled and having your books prepared in accordance with generally accepted accounting principles. So it's having that knowledge of, well, actually, what are the accounting standards, and what do we need to do to comply? We find sometimes organizations that haven't been through a financial statement audit before, they maintain their books mostly on a cash basis. Well, that isn't GAAP, and so the accounting standards are complex. For nonprofits, they're complex. Sometimes we see when people are kind of moving from maybe a for-profit company to a nonprofit, kind of coming into it thinking, okay, accounting is going to be simpler, right? And we're like, nah, no, actually not. The accounting is complex. And so, making sure that someone in the organization, or that you're working with a consultant or an outsourced CFO, outsourced bookkeeper that understands the accounting standards, and then who is working through to make sure that your trial balance, that everything is reconciled, everything is properly stated in accordance with those accounting standards. And that includes, lease accounting, accounting for grants and contributions, accounting for, not only on the revenue recognition side, and so in terms of the timing, but also what is donor restricted versus what isn't. And so it's really going, into that audit process, being fully aware of the standards, being fully reconciled, and of course, the auditors will give you a detailed listing of what they need for the audit. But it's really important to go into that process prepared at that level. Because if not, it's just going to be a drawn out kind of extended process. We also have internal controls, and so making sure there's policies and procedures, internal controls in place. There's no perfect internal control system, and so it's really, the internal controls are going to look very different for an organization that has maybe 3 employees versus an organization that has 300 employees. And so in an audit, what they will require is for you to complete questionnaires for the auditors to understand what your internal controls are, and then they'll do walkthroughs to see, are you actually following those controls? And sometimes out of a financial statement audit, the auditors may have recommendations related to internal controls, and so that it's definitely kind of a no perfect structure there, but the controls do need to be considered. And then last but not least, the document. And so really making sure that when the auditor has the audit preparation listing, that you meet all of their due dates, that you provide everything that they need, and that you're fully reconciled going into that. A lot of times the audit is scheduled, months in advance. And as you come up to that date, if maybe there's questions of really, are we aligned with GAAP, or maybe you haven't provided everything on the audit preparation listing, really looking at, do we actually need to delay? Because again, once you start the audit, the auditor is going to have follow-up questions, other requests, and so oftentimes that preparation listing is really just the start, and then there's going to be more after that. So again, that's kind of the financial statement audit. So just in terms of a primer, we have, I guess maybe before I move on to the single audit, on the financial statement audits for nonprofits or nonprofit accounting, any other words of wisdom, Jen?
I think that my biggest thing that I see organizations struggle with is the fact that when they're looking at their grants, sometimes that there always needs to be a process for reviewing the expenditures charged to the grants. But people see their grant time overlapping the fiscal year. And so they're not thinking about the fiscal year on the program director side, on the program side. They're thinking about the grant period. And so they want to go back and make changes to the fiscal year when you're trying to close or you've already undergone the audit. And so making sure that people understand the process for the single audit and the importance of closing and the importance of making sure that you're regularly reviewing your grant expenditures is key, so that you're not trying to make adjustments to prior grant periods in a time period that's technically open for the grant, but closed in terms of the fiscal year.
Yeah, great point. And when it comes to grants and contracts, the accounting standards around revenue recognition, they have been clarified in the last couple of years, but it still takes judgment. And so it's kind of the question of, okay, you have a grant agreement in front of you that is, promising to pay you maybe, $50,000 a year for the next 4 years. The accounting question is, today, now that we have this, promise to give, this agreement in place, do we recognize that full $200,000? Do we maybe just recognize as revenue the first year, the first $50,000? Or do we actually not recognize anything at all? And it's kind of this concept of conditional versus unconditional, but that's something that the accountants have to figure out. And as we know, in managing grants, every grant is usually different. There might be some commonality across grants, but what we find in our nonprofit financial statement audits, that is, common adjustments or common issues that are identified. It's just that revenue recognition. And so again, it's important that, that there is leadership at the organization, or you've contracted with an outsourced provider who understands what those accounting standards are, who understands kind of exchange versus non-exchange, conditional versus unconditional. And that can, make those determinations, document that determination, because, going into the audit, if that's all been done, now it's kind of like, from an auditor's standpoint, they then just review your determination to determine, okay, do we have any material exceptions versus if the organization has not documented that consideration, then it's kind of up to the auditor to come up with what they think the answer is. So
we have a question
okay.
From Sophie. She asked, do you have suggestions, resources for developing sound internal controls and policies? This one's a little tricky when it comes to federal awards. So yes, there are policies out there for sound internal controls that will cover, I would say, 80% of the scenarios that an organization operating federal grants needs. However, because each federal agency interprets the uniform guidance a little differently, and it's not really interpretation, it's just additional criteria to the uniform guidance. And because each grant can have special provisions that are attached to it, there are instances where you really need to take your grant agreement into account and make sure that your policies and procedures will uphold those special provisions within the grant. Something that I recommend is that as part of the pre-award process, most federal agencies have a checklist on their website that you can use to walk through to see which types of internal controls they're requiring you to have, and then use that as a checklist for making sure that you have policies and procedures around each one of those elements. For instance, you need to have financial software that you can use to track revenues and expenditures by grant. That's one of those elements that's on that checklist for most pre-award risk assessments. I'm thinking specifically, I know that the DOJ has really good risk assessment, and it's specifically on theirs. It's also a requirement in the uniform guidance. And then having a policy where you have an operation, a procedure in your organization to initiate when an account code is created in the system, to initiate when that account code gets closed out, so no further charges can be coded to it. So that's the kind of checklist that you can use to ensure that you then have policies and procedures around each one of those elements. The federal government also has something called the Federal Demonstration Project, and it has some policies and procedures there. It has a lot around subrecipient monitoring. It's a little bit skewed for research and development grants, but I think that has a lot of good resources as well.
Yeah, and if your question, Sophie, is just related to general, nonprofit finances, I'm not able to do it technically here, but we do have internal control guide for nonprofits that we can email Angela and get out to the group, and that really kind of walks through, okay, for cash disbursements, for payroll, for promises to give. What are common key controls that you should have in place? But also the internal control guide, it also identifies, well, what if you just have like very limited staff? You have one accountant. Well, then it, gives some recommendations there. So So again, a number of different resources that can help you. All right. So in terms of the single audit, so again, the single audit it's a federal grant thing, and it is required by 2 CFR Part 200. And we can see here, 2 CFR Part 200 is really the overarching regulations that apply to federal grants if you're a recipient. And it also applies if you're a subrecipient. So, a lot of nonprofits actually don't receive money directly from a federal agency. Instead, they receive their federal assistance passed through the state or through a county, city, maybe even another nonprofit. Well, these are the requirements that you would need to follow. And we have the pre-award. Like Jen was mentioning, the post-award cost principles. Well, the single audit is included in the subchapter F, audit requirements. So it applies to state and local governments, nonprofits. It actually could apply to for-profit companies too, depending on the federal agency that they receive funds from and whether they're imposing an audit requirement. And so the single audit, again, is required. It's based on your fiscal year. So, not based on the length of the award. It's based on what's occurred within your fiscal year. And it's tagged to expenditures. So not amounts awarded, it's actual expenditures. So what was the activity of your federal grants during the year? And if those expenditures exceed $750,000 for your given year, then you're required to have a single audit. For fiscal years ending September 30, 2025 and beyond, that threshold is increased to $1 million. So in terms of, and it is something that's done annually. In terms of preparing for the single audit, it's really a matter of by the time that single audit comes around, your work should be done. Meaning that in the pre-award phase, that you've obtained an understanding of what's required of you. Even before the pre-award phase, you've determined the policies and procedures that you need to have in place. And so you've built that infrastructure to comply. And then throughout that award period, you're applying those policies and procedures, you're managing the grant based on your understanding of the federal grant requirements. So then when it comes to the single audit, which can be number of months after your year end, you're just providing auditors what they need. So details of the program, in the single audit, they do a lot of sampling. So you're providing that support. But you're going into that single audit confident that, that we understand what the requirements are. We've put the policies, procedures in place to comply. We've monitored compliance throughout the year. And again, the single audit is really more of just an administrative exercise at that point. So what we see in terms of first year single audits is things aren't always in place related to that. Maybe you signed the grant award before really understanding what you got into. You started the award activities not having the policies procedures in place, or not being aware of what policies procedures you need to have in place. So when that is the case, the single audit will oftentimes show that. So the single audit reports findings, has question costs, and of which then the funding agency will need to determine what their resolution is there. So again, when it comes to federal grants, they are complex. The requirements are complex. What you need to understand and put in place is complex. And so kind of the takeaway there is to be prepared for the single audit. Make sure that you have that infrastructure built before you start the award, start administering the award. And if you need help, there's organizations like Angela and her group, and Clark Newber does that too, but in terms of helping you get those policies, procedures in place, making sure that you understand what's required of you. So now on the tax exemption side, so we do have some slides here, but just recognizing that Jen and I are not tax experts. But in terms of tax exemption, understanding there's kind of a difference. There are nonprofits that can be tax exempt for the state, but not considered tax exempt for the IRS. And so oftentimes those organizations are then having to be fiscally sponsored by another nonprofit who is exempt from a federal standpoint, so that donors can give contributions and and get the tax deduction from that. But of course, there's annual tax exempt filings and compliance that you need to be aware of. For tax exempt organizations, there's also state property taxes, income taxes, sales taxes. So you have the federal tax issues in terms of maintaining your tax exemption at the federal level, and to the certain extent that you might have unrelated business income that you're paying those taxes, but you also have the state and local tax compliance as well. So a lot to kind of understand and do there. In terms of the at the federal level, there's just some prohibited, don't do list, private endearment, political campaign activities, substantial lobbying. There is some of that you can do, some limited. So, limited unrelated business activities. So, like, for example, I have a nonprofit who owns several Auntie Anne pretzel shops. So they're in that social enterprise. But it's certainly not a significant portion of what they do. So they're able to do some of that unrelated business activity, but still maintain their tax exempt status. They are as a nonprofit, so if you are exempt at the IRS at the federal level, you are required to file a Form 990. And failure to file for 3 or more years, there's an auto revocation, and so that's certainly something to be aware of. The 990. So a couple of other items there on the nonprofit versus tax exempt position there. And then we have the filing requirements for the 990. So certainly something that the finance bookkeeper is responsible for, but the organization as a whole needs to make sure they have their eye on getting these in, because if they are late, there are fees, fines that come along with that. You can sometimes get those abated, but it's just important to know, what 990 is required, when does it need to be filed by. There are some extensions built in that you need to file for, but definitely just making sure that you meet that filing requirement. So we have just a little bit more on the 990 here, the 990N. For the smaller organizations, the 990 EZ, small-ish organizations. And we have those thresholds before, whereas I believe it's the $250,000 threshold, where if your receipts are over that, then you have to do the full-blown 990. And then the 990 returns are open for public disclosure and are posted online, as well as your application for exempt status, the Form 1023, IRS determination, a letter, those types of things. So a little more information on other filings and taxes. And I guess a key takeaway, maybe I'll offer something up, and then maybe Jen, if you want to add in. So when it comes to both nonprofit finance and administering federal grants, no matter the size of the organization, it definitely takes a level of understanding and expertise. And sometimes you don't go into it, with that expertise. So you have to partner with, other providers to help you, or go and obtain, training. But in terms of the nonprofit accounting, the single audit federal grants, it's all there in written form in some way or another. So it's always kind of connecting yourself with, okay, here are the standards, and now through training, through advice, I need to kind of improve my understanding to connect more with those standards.
Yeah, and I would just add that it's a collaboration. It's not one person's responsibility. So it really needs to be a collaboration between a finance point person and the program directors for the various grants, to make sure that the documentation is easily available and is being generated throughout the year correctly and stored correctly. I know a lot of, like, a key word throughout this presentation is documentation. And I think that's just a key word in grants management in general, and making sure that those records are retained in a central location where they can be easily accessed for audit purposes, for agency desk reviews. That's really essential and key, and can take a lot of the last minute scurrying off the table, because you know where it is. You've been prepping in essence throughout the year.